Let's continue with the fundamentals of EMX in this deep dive. So valuation-wise, this is not a straightforward case that due to its long royalty stream fuse to cash flow. So it takes a lot of time for this process of creating assets before you get to the actual cash flow. I mean, this is still mining we're talking about, even though EMX themselves are not building the mines. But a typical contract details about 5 years of milestones, and then perhaps they get the acquirer gets into production and starts paying the actual mining royalty stream. Before that, there are some cash elements and milestone payments. So sure, there is a minor cash flow coming to EMX, but not really that significant in terms of the total value for EMX. And the difficulty for us as investors is that every week or month or so you get a new press release from some of their 200 plus assets being sold against a net smelter royalty stream, including several milestone cash payments, a first upfront cash payment, etc. And once you start calculating on these, often I have detailed tens of these deals over the last 1 or 2 years, where the value of the contract that they have entered into is between 10 and 100% of their total market cap. But of course, those values lies 5 to 10 years into the future. But keeping track of these and keep summarizing these, you always get to a total value for EMX of many times its current market cap. But again, it's not straightforward, and these contracts are complicated, and you never know exactly how good the acquirer will be at managing the asset. Fortunately, EMX usually sells to high quality operators like Lundin Mining, for example. And we also, of course, have this joint venture with Franco-Nevada in terms of finding new and developing new royalty streaming assets. Where let's take a look at the EV to sales multiple. So it's currently at about 11 times. It's about as low as it has ever been for EMX. So that is a good thing for us. I mean, there should definitely be upside, not least considering that Franco-Nevada is at about 26 times, so 2.5 times as high valuation multiple. That means that we should be able to expect at least a 2x factor over the coming years in terms of pure valuation. So even if fundamentals in terms of sales were to be completely still, you would still see about a doubling in the share price logically. Otherwise, I would expect FNV, so Franco-Nevada, to make a bid for this small but highly valuable company. Looking back to the 2020 peak for EMX, they were actually trading at about a 46 times revenue multiple. So that is 4 times the current value. And that is actually where they should be, considering the growth potential and the likely future endpoint in terms of valuation multiples. The reason that the revenue multiple is so high for these royalty streaming companies is that they don't really have any operations. I mean, they don't have a mine, and they don't have physical assets. So what they have is a small portfolio of development assets, and once they have sold it, that is just pure cash flow coming in with no additional costs, no costs whatsoever. So it's more or less pure profit and pure cash flow coming in from these contracts. As we can see here, revenues are growing quickly and promisingly the last 10 years, but with a level of about 8 million or a quarter, or let's say 30 million a year, it's of course not quite enough to warrant the current 440 million Canadian or so, but not far from it actually, as we'll see. And gross profits are along for the ride. You can see they got through a threshold here about 3 years back, when they finally won this Sijin lawsuit against one of their clients actually, and they started getting payments, and they also even got a final payment, catch-up payment for revenues lost over that time. That's the large bar here. However, to warrant an almost $500 million Canadian dollar market cap, a little bit more is needed. So what we need to do is establish exactly how will they get their revenues to where we want them to be. This is a picture of the market cap. Peaked in 2021, went down considerably, and then reached a trough here in early 2024. But right now it seems to be on a tear to the upside, and sits at 437 million Canadian. Please note here that sometimes it's difficult to keep US dollars and Canadian apart, because they report in US dollars, but some numbers are reported in Canadian. So it's very, very easy to go wrong there. This is their total revenues, which is currently at about $30 million per year. Again, this is also a bit complicated because they have a lot of adjustment factors, and it's not easy to see what their real adjusted actual revenue numbers are. As we can also see here, is that the gross profit, and this is measured in US dollars now, is at $16 million on a revenue of $27 million. If we take the enterprise value in terms of US dollars of currently 325, so that's more or less 450 million Canadian. The valuation, the current valuation right now from an enterprise value point of view to gross profits, it's just 20 times. I mean, for a growth company in any other industry, 20 times gross profits would be considered, well, at least not expensive, but probably quite cheap at 20 times. So the reason we are here is that the market is not used to valuing mining companies that high, even though they are actually doing that with Franco-Nevada. But Franco-Nevada is a particular case because it has 100 times as high market cap as EMX. So it has a completely different set of owners that are used to valuing companies, and that also dare to have confidence in a company simply because it is that large and has proven itself able to grow to that size. So that is what we're hoping EMX can emulate in the future, but maybe takes 5 to 10 years for the market to gain the same level of confidence for EMX. But my guess is that even if the market doesn't, then Franco-Nevada will, since they are so deeply involved with EMX, with this joint venture. Not only is that do they have a joint venture, what they also has is that they contributed, EMX only contributed 45% of the joint venture cost, and Franco-Nevada 55%. But they hold equal amounts in the project. So that means that Franco-Nevada has really high confidence in EMX's capacity to create value. So in any way, to get confidence on the stock, for us or for other investors, we really need to get into the details of as many of its actual projects as we can have time to in order to estimate future revenues. This will still be difficult to do to any level of detail, but as long as we can establish the future revenue level, then profits and valuation multiples will take care of themselves. As long as we get the revenues right, then we will get the valuation and the profits right, simply because of the setup, the royalty streaming business operation setup Let's take a look at these fabled projects that EMX has. The project is it's a tongue-in-cheek referral to these high-rise buildings for poor people that you always see at the outskirts of large cities. So derelict buildings for poor people. And in this case, the projects are whatever EMX is developing before the market and their clients can see the actual value of what they have. So remember, they have more than 200 of these projects, and the number is growing, even though sometimes they sell whole portfolios of these, like with 10 to 20 separate projects, so that can actually decrease the number. But then they keep buying land plots and developing them with their own geologists. So you can see there is a concentration here on both the west coast of the US and the northern parts, including Canada. Some spots here down in Bolivia and Peru, and also the Scandinavian countries has a kind of a hot spot for EMX. It has more than the fair share of projects are actually in Sweden and Norway and Finland. There are a couple of scattered projects here and there, and also a few in Australia. So they have a highly diversified portfolio. What they do is they acquire land in areas that have a history of good finds, and they buy cheap land plots adjacent to where other miners are active. And of course they use their geologists and their long experience and their portfolio of how to find really good assets in order to pay as little as possible to get as high quality projects as possible. You can't really know for sure if they have the real competence to do this until you are in the situation that EMX is now, where they have a lot of proven projects. Some of the projects of such high quality that even though they only spent a couple of $100,000 on them, they are now worth hundreds of millions of dollars. Actually, EMX repeatedly says that some of their top 5 projects, maybe the top 3 projects, each one of them is worth more than the entire market cap for EMX. They are that valuable and that promising, and they are already producing many millions of dollars in cash flow, each one of them to EMX. And the operators, for example, Zijin has said that they have plans to invest $4 billion in developing those assets where EMX has the right to a percentage of the total production. So they have an extremely good record of finding both a lot of good finds and a couple of really large ones. But still, the number of producing royalties can be measured on just one hand. Like there are these 7-8 contracts: Caserones, Timok, Gidiptepte, Sisorta, and Leeville. You will see these names again, but these are the ones that actually make up more than 80% of revenues currently, and they are growing quickly as well. These are about 10-12 more contracts that are in an advanced stage. That means that they could be pretty soon in production. Most of these are silver, gold, or copper. There are some battery metals as well, but mainly what EMX is about is copper and gold. Sometimes copper is the larger one in the current cash flow, and sometimes it's gold. But over time, it should be gold that holds the larger part of EMX's cash flow and value. This is what the breakdown has looked like the last couple of years. You can both see the growth in adjusted revenue and adjusted EBITDA, the line here, how they've gone from about 0 adjusted EBITDA in 2021 up to most recent year's level of $20 million. And we can also see how much of that is, for example, royalty revenue and what is other milestone revenues. What we're looking for in the future is as high share of this blue line as possible. That is the actual royalty revenues that we know will be recurring and dependent on volume and metal prices. Here we can see the revenue by asset, and here it becomes really apparent that it's this Gedichttepe that actually is more than half of total revenues in 2024. It will fall in terms of the total share of revenues, but you can see here how extremely important just single super high producing assets are for EMX. And here is the current composition in terms of copper versus gold and other metals. Copper is the blue line here. Copper was dominant in 2023, but in 2024 gold outgrew copper, so gold is again the main value driver for EMX, and the same goes for 2025 in the first quarter. And I definitely expect that to continue, even though copper has made quite a comeback lately in terms of metal prices here in mid 2025. Here's a more clear picture of exactly how the revenues look for EMX. So Gedichttepe, 40% of revenues in the first quarter, Caserones 28%, and then Timok 15%. I would say that each of these three probably are in the order of magnitude of being worth, each being worth the entire market cap of EMX, and that is before even considering higher gold prices in the future or copper prices. So these are worth the entire market cap each based on simply the net smelter royalty percentage and coming volume increases, but not gold price and copper price increases, which of course is one of the reasons I'm interested in EMX, is that I expect much higher metal prices, but that is not included in the projections of these the worth of these assets right now. Here's the guidance. Here's one reason the company is holding back a little bit, and that's because the guidance for adjusted royalty revenue, although they beat it considerably. Look at the low end of the range was $22 million for 2024, but they reached $33 million, so they were actually 50% better than expected in 2024. And the 2025 guidance is a bit muted here, pointing to perhaps a flat revenue for 2025 versus 2024. Maybe they will beat it, maybe they won't. That's not where the fight is. It's rather 5 years out, as some of their more important projects are really getting into growth mode. We can also see consensus analysts. Of course, they are always bullish, but they have moved up slightly over the last half year, and notably perhaps is that they are currently estimating the net asset value, which probably with pretty conservative numbers, and based on either flat metal prices or possibly even lower metal prices, because typically you never include the current metal prices to their full extent. Rather, you use some kind of a industry consensus, and still the NAV estimate is about 50% higher than the current share price of 4.20. So here are some of their top assets. You can find all these numbers and the presentation on EMX's excellent investor relations webpage. I can actually show you some of it here. For example, Timok, which is 15% of the revenues in the first quarter. You can see a presentation here of exactly how this is evolving. So they they got $8.6 million in revenue in 2023, which actually was related to earlier production, but they had to actually fight in court for this number. And what you can see is that they should have gotten 1.6 in 2021, then 3.2, then 3.8, and in 2024 they did get $5.2 million. So this should not be seen as a decline from 8.6 to 5.2, but rather a constant progression upward. And in first quarter on 2025, they got 1.6 million. So take that times 4 and you're at 6.4 million. So you can see it keeps growing. You can also see here that the actual construction of the Timok mine is only here in the upper parts, the yellow parts. And they are currently in development of this huge red area, and EMX has a royalty right for everything that Timok is producing. And as you can see, the red ore here is many times, maybe 10 times as large as the upper site, and this is one of the reasons that, for example, Timok is expected to create more value than the entire EMX is worth. But no analysts are of course discounting this just yet. And that's because you don't really have to. You can value EMX on just current numbers, but this is really where the promise lies. So this is one of the reasons that EMX is so interesting. And this goes for Timok. It actually goes for a couple of the other finds as well, where there is probably much more hidden beneath ground in their other assets as well. And not least in their portfolio of over 200 exploration assets, which are not included at all, or for that matter, the advanced stage projects of like 10 to 15 various assets, which are of course also not included in the cash flow. So these are future cash flow streams that will keep being added on top of what they're already getting. And the current producing assets are also progressing positively, each one of them. So every dimension of EMX is growing, and that's why it's so interesting. But let's continue here with the top 5 assets. So we have the Caserones asset, which is 28% of Q1 2025 revenues, and is operated by Lundin Mining. What this means is that you get the full competency of the Lundin Mine family. What they have done is they realized that EMX is sitting on a great asset. They wanted to buy it. They bought it for an upfront cash payment and then a net smelter percentage revenue for all future production. And Lundin Mining is putting in a lot of resource to develop this asset, which means that it will only keep growing, and it's already at 28% of the total revenue for EMX. Then there's the Timok we just talked about, and Gediktepe, which is operated by ACG. And it's currently 40% of total revenues in the first quarter for EMX, and this also has a large capacity for growth, not that it's actually needed in order to warrant the valuation. And 2 of the other ones that together make up about 80% in the end is Leeville with 8%, operated by Nevada, and Balia, operated by a private company in Turkey called Esan. The fascinating thing with EMX again is that they have proven their ability to find super interesting assets. And already these 5 key assets, which actually make up about 97% of their total revenues in Q1, they are each one of them growing already with the finds they have, but they also, as we could see in for example, Timok's case, have other potential or deferred or probable assets which might be 10 times as large as what they've already mining from, and all of that is relevant for EMX, and these are just their current 5 producing assets. Just imagine adding the other 12 advanced stage projects, or the 200 exploration stage assets. We don't know, of course, that these will generate anywhere close to what Gidiktepe, Timok and Caserones are making, but we don't need to know that either, because even just Timok is probably, which is currently at just 15% of sales, is probably worth more than the entire market cap. The reason EMX is still such a cheap company with such a huge upside is because you really need to do this type of forensics. You need to go into each project, and even when you do, you can't really grasp it. There are not enough details to actually put into numbers and convince anybody who has a limited amount of time to understand what you're trying to say. But what I've found as I've covered this in more detail, which is unfortunately impossible to convey in a video like this, is that each separate press release from the company where they have sold some obscure asset that you had never heard of because it's just completely hidden in all their hundreds of projects. Once you start summarizing the milestone payments, the upfront cash payment, their pricing in terms of these put and call derivatives, the put call option setups, mutual put call options, and you can see what their expectation is in terms of what it will cost to buy or sell a part of the asset in the future. You can see that their implicit valuation of that single obscure 1 in 200 assets can often be in the order of magnitude of maybe 10 to 20% of total market cap, and they have hundreds of these, but this is all obscured by the sheer number of assets. And yet again, to summarize the fundamental part of this, in terms of revenues, already just these 5 assets create enough gross profit to make the company on current revenues be worth only 20 times gross profits, which in itself is not really that expensive, except that in the mining industry you're not really used to using multiples, growth multiples.